whole life insurance is not an investment. That's the point. So number one, if you're comparing earnings or whatever in a whole life insurance policy to an investment, you're comparing apples to oranges. Now, I would also add, if you really were to look at the actual net return, if you factor in taxes and fees of what you're earning in a whole life insurance policy versus what you might be earning in the stock market, it's not too far off in many cases.
One of my all-time favorite quotes was George Bernard Shaw. He said, "The problem with communication is the illusion that it has occurred." Are we communicating effectively about our money? As financial advisors, are we communicating effectively to our clients? Are we showing up and creating the first impression that we hope to have? We know we get into the financial industry because we want to make some money and we want to help some people. We want to have our cake and eat it too. Former Canadian, now American, infinite banking practitioner, former track star, Lesley Batson, Rebel Rock Wealth. This is pretty awesome. This is going to be my all-time favorite interview. All right, Lesley, here we go. Let's dive right in. Most of the people watching this channel know that we're here to talk about a solution to a problem. They know we're here to talk about the infinite banking concept and all the different iterations that are out there. We're going to unpack it. We're going to repack it. We're going to twist it, turn it, but we're going to get down to what matters. And what matters today is what matters to you. So why the infinite banking concept? How did you find it? How is it a solution to a problem?
Okay, well, first, thank you for having me. Second, I have to correct you. I'm not former Canadian. I'm born and raised Canadian, will always be Canadian. I have dual citizenship.
Okay,
So
fair enough.
Yes, I'm proud to be Canadian and now happy to be American as well.
Dual citizenship. This is remarkable.
Dual citizenship, yes.
Hey, you could get.
I'm not giving up my Canadian citizenship.
No, but could you be duly licensed in Canada and the U.S.?
I don't think so. I haven't really looked into it, but I
Wow.
don't think so because I don't reside in Canada, so I don't think I can do business there. I'm not sure. I haven't really. I have enough to take care of here,
No doubt.
so I haven't quite looked into getting licensed there. But I am still Canadian, so
That would be true globalization right there if we had someone that could write business in Canada and the U.S. This is. I think that's fascinating.
yeah, I might have to look into that actually.
Yeah.
But yeah, so why infinite banking? So I would say once you know about it, I'd be curious to know why you would not pursue infinite banking,
Yeah.
right? I think the biggest, issue with this is just that not enough people know about it and understand it. And I just think how I came into it was really at a time when I was trying to kind of figure out my own personal finances, and I ended up kind of looking online and, just kind of seeing blogs and some, gurus or, financial edutainers, whatever you want to call them. And just basically what I was reading about them didn't quite line up. Like I just thought, well, I don't think that's what I want to do with my money. So I went and saw a professional, I went and saw a financial advisor, licensed financial advisor. And to be honest, I don't think that they shared anything very different from what I was reading online. And that didn't obviously align with me. So I thought, I'm just going to do what I know and what I feel comfortable with. And at that time, it was real estate investing, just buy and hold. And so I was deeply listening into a lot of podcasts, to get my education. And on this one particular podcast I was listening to, one of the episodes, a gentleman came on and he started talking about infinite banking. He started talking about, for real estate investors specifically, how you can use, whole life insurance policy to capitalize your deals and have it as a place to put those cash flows when they're coming in from your investments. And I had never heard that before. I was just like, what's he talking about? And so he happened to also have his own podcast. So I went to his podcast. I basically listened. I binge listened to everything he had, and got and learned about Nelson Nash and Be Your Own Banker. I got the book, but I said to him, I'm still not 100% sure that I get it all, but I know I want to get started. So I got my first policy with him, and we had just more of a conversation. And I said to him, I feel like I really want to share this with more people because I don't understand how I, have been working professionally for, at that point, almost 20 years and had never heard of this as a means for my, managing my money, my personal finances. And so that's how I learned about the Nelson Nash Institute. So I, had a meeting with them to find out what the process was. I got licensed, in the state where I live, and then I pursued the program. I became authorized. I've been attending the national or the like annual think tank, which is kind of like our annual convention each year since then. And that was so I think my first think tank was in 2018. So
Wow.
it's typically in February. So I've been going to them annually since February 2018 and just continuing to meet, other authorized practitioners to understand, how they share the message with their clients and their network. So that's what I've been doing.
That is so remarkable. And now you've got to meet and did some mentorship and some training under Nelson Nash himself.
I did get to meet him. I can't say that I had direct, coaching from him, but yes, he was at those think tanks and, certainly had, dined with him and had conversations with him. And, thankfully was able to get, even some pictures with him before he passed. So, but yes, he definitely has made a huge impact in my life because it's, essentially changed the trajectory of my future by, starting this business so I can help other people.
And what specifically, just being around him, I've never got to meet him, unfortunately, but I know many people that have. And when they speak about this individual, they speak about Nelson Nash, they speak in the most complimentary. I mean, they almost get choked up. This individual had such
Yeah.
an impact on the people that he met. It seemed to get mentorship from him was just by being around him in any capacity. Can you relate to that?
Oh yeah. Yeah, it's almost like anytime he opened his mouth, it was some type of wisdom that you wanted to kind of write down on a piece of paper. But yeah, he was just so wise, and he really just had a heart for sharing this with people. I think he was just so keenly aware of how just the systems that are out there, the banking system, just all the financial systems that are out there that we all have robotically moved through life. We did it because it's all we knew. And so I just think he was so personally invested in making sure as many people knew and understood all the benefits that come along with whole life insurance and how you can leverage it and how you can use it for your own life. Like while you're alive, it's not just about the death benefit once you pass away, which is also significant, but how can you use it to maximize and grow your family's wealth so you can wean off of the systems, wean off of the banks for those for all the reasons that we lean on them today, credit cards and just all those types of things. It's like you can build your own bank within your own family, and that's something that can go generation to generation to generation. And you just have so much more control, so much more privacy. There's just so much. And so just he was so wholeheartedly invested in getting that information out to people. There wasn't a, he was just a very humble man, and his family. I mean, his wife is there, his daughter is part of it, and they all sit with us and dine with us, and they're just the nicest people.
It's an amazing thing. Like you speak, any other friends that I have that have met the man can only speak and can speak confidently on all the points that you just spoke of. One of the things that Nelson had that I've read about, and I've again not mentored directly by him, but I've read enough about it, is the idea of building the 10%. And how would you describe, what building the 10% means to the infinite banking concept, means to, say, Nelson Nash as the founder of the infinite banking concept?
Well, I think how I live it and how I understand it is really it's helping again kind of moving off of the system that we're on today, right? If we just think about how the economy and how economics is run in this country, they want to lower interest rates and manipulate things artificially instead of just allowing things to happen organically. And there's been so much manipulation over, well, the decades that we find ourselves in this situation, right? Where here in the US for sure. I mean, we are trillions of dollars in debt that we can't pay for. And, I'm concerned about the future of the country, right, financially, because look at where we are today. I mean, literally, we have, Congress trying to, both sides trying to figure out how to raise the debt limit. They're constantly raising the debt limit. And so it's like, if enough of us have enough wealth amongst us, then we can sort of be independent of those systems. We don't have that need and that reliance, right?
Hmm.
If just 10% of us were able, 10% of the population, 10% of us were able to be off of that system, it could truly make a real difference in how the, economy is shaped moving forward, and particularly for your families. So I think what he really wanted to do was try to, build this 10%, get as many people as possible to be able to adapt this infinite banking within their household, within their family, generation to generation, so we can kind of move towards that 10% mark.
Yeah, well said. That was really, you painted a really very clear picture of what is popularly known in the infinite banking circles as the idea of building the 10%. Is that sweet spot? It's that tipping point where when banking becomes
Right.
controlling the banking function of your life by a certain percentage of the population, or understood by financial advisors to be able to prescribe the solution to the problem, is when it hopefully becomes more of a solution and less people are in debt and more people have opportunity, and there's a different
Yeah.
kind of new economic model that's kind of the new normal, as it were.
Exactly.
Yeah.
Yeah.
One of the things about that, so moving from the Nelson Nash, I mean, Nelson Nash being the founder and the creator of the infinite banking concept, and some 30 years ago, I would say. Now, there's been lots of different variations. You brought up something that a word that I really want to go kind of swing back to, which you talking about, edutainers, financial edutainers. Right now, there's one
Yes.
one of them in particular that's out there today, and his name is Dave Ramsey. And now Dave Ramsey has been very, very prolific recently about saying bad things about the infinite banking concept. Now, to me, and I'm a huge fan of the infinite banking concept, I live and breathe it in my life like you. Every time Dave opens his mouth, I'm applauding him. I'm thinking, great job, Dave. In my mind, Dave, you are building the 10%. For every time in this today, every time that you run your
Yeah.
mouth about how ignorant you are about, and I don't even think he's that ignorant. I tend to think that he knows exactly what he's talking about. He's built a brand around saying bad things about whole life insurance, and he's too successful to pivot on his reputation. He would bring too many people down with him. Anyways, I digress about my opinion on that. My question to you, Lesley, is, what do you think about that? What do you think about edutainers like him? And then, is the backlash and why the backlash? Why does, say, whole life insurance get a bad rap? Is it misinformation? I mean, we know from Google Analytics, all you got to do is run some Google Analytics and you'll see that whole life insurance is one of the most sought after, searched, progressive, forward, financial buckets products in the world right now. But, with the rise of anything successful, there's going to be a relative curve of haters, if you will. Now, are the haters pushing us up, or are the haters kind of pulling us back? And are people, in a way, kind of bastardizing the message that Nelson has been trying to put forward by putting their own spin on it, if you will? There's a lot in there, but any you can pick up on any of those things and
Yeah.
kind of run with it.
Yeah. So you touched on a few, I think, key points, right? So number one, I think some of those edutainers, I think some of them believe what they're saying, right? So they really do believe what they're saying. I don't think he specifically believes that. I think he knows a lot more about the benefits of whole life insurance, and so I really don't get why he's so against it. I know that he sells term. I know he sells term, but I mean, if you're able to sell term, you're able to sell whole life. So I'm not sure why he pushes people towards one and not the other. I do believe that, he does serve a specific demographic, right? I mean, I think if you are someone who's terribly in debt and you just can't figure out how to get out of it, I think he serves that demographic very well. And I think that
Yeah.
there's a point where there's some people who are at that stage and they're just trying to get to like financial independence.
Mm-hmm.
But if you want to get to wealth building,
Mm-hmm.
which to me is very different from financial independence, then you need to understand the various vehicles and tools that are out there to help you build wealth, right? Term life insurance, I don't have anything bad to say about it because I do think it has a time and a place. You know, even for those who get whole life insurance, if you want to be able to get your maximum human life value in coverage, you may not initially be able to afford it all in whole life. So you may want to supplement. You might want to have some term with your whole life. Now you want to have convertible terms. So you want to be able to convert that term over time into whole life insurance. So there's a place for term life.
Mm-hmm.
So the edutainers, I believe some of them just aren't educated, right? They're just not informed. I also feel like I've been very fortunate. You know, I didn't grow up and build my career in the financial services industry. I worked in IT, had a career in technology for 20 years before I converted and transitioned into this business. So I'm like most people, right? I wasn't trained by, you know, the Wall Street companies and you know what I mean? Like they themselves don't understand life insurance. Their focus is selling market product securities, bonds, stocks. Like that's what their focus is. And insurance is like a side
Totally
a
agree.
side
The
thing,
life
right?
insurance companies, just to pick up on what you're saying, don't even understand the
Yeah.
products that they're selling in a lot of ways.
I would agree with that, right? So there's sort of this, I think because I'm a nerd, you know, hey, I'm a nerd. I'm just like I said, I get obsessed with things and I really need to understand it, you know, before I even put my money in it and invest it. And that's why I just started to become so immersed in it because I really just never knew or understood the product itself, like what whole life insurance was, meaning what it was, all the benefits that you have while you're alive, and the benefits that you have after you pass away. Like I never knew all those things, and most people don't.
Yeah.
Also, the obvious thing is that your premiums for whole life insurance are more than term life insurance. So it's so much easier for people to just to just say, oh, whole life insurance is a ripoff or it's expensive. It's, you know, it's easy for people to say that because they don't really understand how it works.
Mm.
I really help people understand how expensive it is for them to be putting their money into things like a 401k and an IRA and those kinds of things. Um, they may not see the cost of that until they are ready to use that money 20, 30, 40 years down the road, but that's too late, right? So I think a lot of it is ignorance, right? It's just a lack of knowledge, a lack of understanding. I think some of it is for whatever reason they want to push other things and, you know, discourage people from whole life. Why? I don't know. It's some type of agenda that they have. But in other ways, I just think, you know, I don't think that the money or, you know, I just don't think the money is spent helping people understand whole life compared to what is spent helping people understand how easy it is to invest in the market, right?
Yeah.
Like it's so easy to invest in the market. I mean, if you have 25 bucks, you can open an account and start investing in the market. If you have a 401k at work, they will automatically enroll you into that and you start investing in the market. So like there's no barriers to that, right? It's like very easy. And also people think of it as like, okay, well that's investing. So that's about big returns. At least that's the mindset of it. They don't necessarily equate the risk with that, but but they're like, okay, investing, I want to get started. I want to make bigger money. Life insurance, they don't even understand the savings portion of it and how your money can, like they don't even know. I mean, I didn't know it. You know, I didn't know that. I mean, most people who I talked to didn't know that until I explained it to them. They really only thought of it as, you know, insurance, like car insurance. Like you're paying for this premium, and then if you get into a car accident, you know, you file a claim and then you get some money. And that's kind of how they think of it. And they don't understand how the various nuances and benefits and features of whole life insurance.
Yeah.
So it's all of
The
those things.
flexibility, the flexibility of it.
The flexibility. Yeah.
Mm-hmm.
Yeah. They
Remarkably
just don't
flexible.
even know about it.
No, they don't.
Yeah. And if you have someone, you know, an edutainer who's on multiple platforms, they're on TV, they're on radio, they're on podcasts, they're in churches, which to me is,
Yeah.
I think that's the part that bothers me the most is like he has very much targeted this community
Mm-hmm.
and they almost worship him. And so it's hard for them to even realize that some of the stuff that he's sharing is not necessarily true or the best advice for them, but so I think that's just with anything. You have to just try to get the right information in front of people and just hope that they're open to hear it. And then they can decide for themselves what makes sense for their family. And usually when you have all the information, you'll make the right choice.
Someone we both know is named Dr. Bob Murphy, Dr. Robert Murphy, who is an economist who actually attends the same church as the gentleman that we're speaking of
Really?
right now. Yeah, and he actually on his
Didn't know that.
one of his, so he has two podcasts, and I'll put actually the in the show notes, I'll put the links to his podcasts. He has one called the Larry Murphy Report, and also the Bob Murphy Show. And in the Bob Murphy Show, he actually goes out from an economic perspective, very critical, very mathematical, talks about how essentially Dave Ramsey is just mathematically wrong in his assessment. And he tells a funny little story about how he goes to the same church and he thinks he's actually a really super nice guy, and he was crossing the street and Bob knew who he was, but he didn't think Dave knew who he was. Anyway, it was just this funny kind of story that those two guys are going to the same church in Nashville.
Same church.
Yeah, so
Interesting. I didn't even know that.
yeah, I actually, I picked that up from watching the Bob Murphy Show, and again, someone that we hold near and dear, and definitely a mentor to both of us in the economic world, the Austrian economic world, for sure. So, one of the things that I love about you, that you said is you called yourself, I think it was a nerd at one point now, or a geek, I think it was. And now, fortunately,
I'm a nerd.
A nerd,
Yeah.
it was. Okay, so being a nerd today is like being a rock star. So it would be like, say, 10 or 15 years ago and saying, "Hey, I'm kind of cool. I'm a rock star." But we get what you're saying. The great thing about being a nerd is that there's a critical thought process that goes into your arrival and your confidence in the whole life insurance as a way to basically store capital. It sounds like, and then the death benefit is kind of the icing on the cake or the cherry on the sundae in a lot of ways. And so thinking about a product called life insurance, but thinking about living in benefits versus the life insurance first, involves a lot of rethinking your thinking, a concept that we speak about often, and getting into the math of it for anybody who is where we're at with the concept, applying it in our own lives and our families' lives. The math really doesn't lie. And when you are able to understand the math, and so I know for me it was when I read a book about, someone told me, don't compare don't look at life insurance as an investment. And then they started to dissect the internal rate of return versus the average rate of return. This kind of critical thinking. What was it for you from a math perspective or from a critical thinking perspective? Are you able to isolate it down to kind of one or two kind of lightning bolts that went off mathematically about the product of whole life insurance that allowed you to kind of continue on your journey and devote your life to it?
Well, there's a couple things. So the first thing I would say, because you just mentioned the I word, investment, is that whole life insurance is not an investment. That's the point. So number one, if you're comparing earnings or whatever in a whole life insurance policy to an investment, you're comparing apples to oranges. Now, I would also add, if you really were to look at the actual net return, if you factor in taxes and fees of what you're earning in a whole life insurance policy versus what you might be earning in the stock market, it's not too far off in many cases. But in any
Totally
case,
right.
you should not think of, so you should not think of your life insurance policy, a whole life insurance policy, as an investment, because it is a vehicle where your principal is safe, it's secure, very much so like a savings account at the bank. So your savings account at the bank, these days, if you're lucky, you're earning like 0.1%, but let's say you're earning 1%, right? You wouldn't consider those investment returns, right? But you're willing to put money in a savings account because you feel like it's safe there in the bank. It's protected. You can get to it when you need to. Yes, you get a low rate of return, but the trade-off is the safety and security. An investment is something where the principal is at risk. Once you put it in there, right? Your investment is at risk. And you're willing to take that risk, and the trade-off is a higher return or higher earnings, right? So I would say that for me, one of the key reasons that I did it was because I wanted a safe place to put my cash. right? I wasn't looking at it for an investment. I was looking at it as a place to build up my capital that I want to use, whether it's just for my basic savings, my emergency savings. And when I want to continue doing my investing, I wanted to be able to leverage it. I wanted money that I could tap into to leverage for those purposes, and it can continuously, you know, um, grow, right? Um, Thirdly, for me, because again, I came from IT, I'm just a analytical person, and the numbers don't lie. It was, again, when you look at the tax savings. So for me, I looked at if I'm maxing out a 401k over X number of years, yes, I had some tax savings in those years where I put that money in. But at the end of the road, when I look 20, 30 years down the road, when I want to actually start to take out that money, those monies have grown, hopefully, they've grown. And so now, even if I stayed in the same tax bracket, okay, let's just pick an easy number, 20%. Let's just say if you were, well, if we were to use an actual tax bracket, let's say you're in the 28% tax bracket, marginal tax bracket. So you could pay that 28%, pay your income tax each year and then just have that after tax money. Or you can put those pre-tax contributions into the 401k or whatever vehicle it's going to be and let that grow. So you're basically going to have an uninterrupted tax liability, okay, for decades. And then when you finally want to tap into it, you're going to pay 28% on that larger amount. So, okay, I got a little bit of a benefit on those years as I went, as I went down the road. But at the end, when I really need it, when I'm no longer really generating or, producing any income potentially, so when I really need to access that money, I don't really have as much as I thought I did. All these years I've been looking at this statement and it says I have X, but what I really have is X minus those taxes that I have to pay. And that tax liability that's been growing all those years is much more than what I paid if I had just paid those taxes each year. So for me, it's just, again, it's math. It's math. It's like, why would I put my money one place when I know that there's a much more tax efficient place to put my money? And obviously, the higher your income, the greater the tax saving. So it's really just a place, it doesn't really matter what you earn, but it's just one of those solutions that helps you with that, Uncle Sam.
I love how you put that. I mean, you just described a very real problem that a lot of people don't see. And why don't they see it? Because why would they see it? The compounding effect of your tax is very, very real. In these registered government suggested financial buckets, retirement planning strategies, the tax within these buckets is compounding. The one thing we know about tax is that you're going to pay it, and it's likely over time going to go, well, not down. Let's put it that way. It's likely right. Going to go up. So if we think about the mechanism of compounded interest in our life, and this is kind of what you just said to me, it's doing one of three things. You're earning it, hopefully, and you kind of described how you can earn compounded interest and compounding your capital. You're paying it, or you're missing out on the opportunity to earn it. And if you are in fact now some people still would like to think, well, I still want to have a 401k. I relate to both. Now, if a client related to a 401k, a Roth IRA, a 529, say for example, in Canada we'd call that an RRSP or an RESP or a TFSA. That would what you'd have in Canada. Now, if an individual related to one of these buckets, there was stewardship throughout their family of owning them, but they also said, Lesley, I also get whole life insurance, I get infinite banking. Can I do both? And what if I was to be able to do both? How would I do that? What would be the mechanism of doing that? If I had a free and clear extra $1,000 a month, how would you suggest that client manages their $1,000?
Well, so, again, it would come down to, so first of all, yes, you can. I mean, you can, think of them as just different buckets, right? Just think of them as different containers where you're putting your money to serve different purposes. So the 529, like you mentioned, that's if you're wanting to save money for your child's, education expenses. So you have a very specific mission for those dollars. Now, the thing that I always say to people is a 529. So here, 529, you can make contributions to it. You can invest those dollars. It can potentially grow. And then you can use them for education expenses. With a tax advantage, right? You don't have to pay the taxes on that money if you use it for the qualified expenses. But I also say to them, okay, your child is 3 years old. You have no idea if they're going to go to college, if they're going to want to go to college. You have no idea how much the cost of education is going to be, 15 years from now. What if you could have some flexibility? Oh, and sorry, and by the way, there's that whole opportunity cost, right? You've kind of assigned these dollars for this specific purpose, which is not a bad thing. But again, what if there's a change? So, but at the same time, if you were to put those same monies into a whole life insurance policy, then you can use those monies for their education, or you can use it for other things if they choose to not go to school. Maybe they want to start a business and you can help seed that for them, right? But even if they do choose to go to school, you could just borrow against the equity that you have in your policy, which is that cash value, borrow against that, use that to pay for their education. Hopefully, once they graduate and they start working, they can pay you back that loan. So you are replenishing that money into your policy, and you have it now to be able to use down the road, whether it's for health expenses, retirement, whatever it could be. But those dollars weren't sunk that one time to that college education. You can use those dollars over and over. The second benefit is that your kids get the benefit of learning what it's like to have a responsibility, to have that financial responsibility to pay back a loan. But also they're able to do it without having to affect their credit, right? The student loan is not on their credit. It won't affect their ability to, get an apartment or buy a home or do whatever it is that they want to do, because they don't have the burden of that loan on their credit. But you could very easily structure, and I've done this for clients, structure a little contract, a little loan agreement, a little amortization schedule, and give that to the child, and they use that to pay that loan back to the parent, right? So there's just so many benefits of doing that. That's just one example with a 529, but you could do that with anything.
I love
but
that.
The whole point is that using your
such a good example.
I was going to say the whole yes, because the whole point of your policy is that it allows you to do multiple things, and you can use those dollars more than once for multiple reasons, and it's continuing to grow uninterrupted. That's an uninterrupted compounding of your money in that policy, because remember, you're not withdrawing or you're not taking money out of your policy to do these things. You're literally just getting a loan against the value that's in your policy, very much like a home equity loan, right? You get a loan the bank will determine how much they'll lend you based on the equity you have in your home. This is a very similar concept. So you're just able to borrow that money and use it while your money continues to grow in your policy, and you can use it for whatever reason you want.
Yeah, this is fantastic. I mean, what we know one thing for sure, that what do wealthy people do? How do wealthy people? Well, obviously they use whole life insurance, but they use OPM. Whole life insurance is OPM, right?
Yeah.
And that's other people's money, right? Yeah. Hopefully the editors of our podcast will throw some cool OPM thing in right here. See if they do that right here. See if they do that. OPM. We'll see. All right. Dave for that.
Absolutely.
Dave, OPM. All right. Hey, Lesley, and we're going to wrap this up in a little bit. I know that there's a ton of value in talking about the 529. I'm going to ask you to ask me a question in just a second, but I'm going to preface it with the idea that got me into this business was what it could do for children. What the infinite. Once I saw the power of what one premium payment does for instantly 3 generations. So one premium payment is using $1 2 or 3 or 4 times, but it's also affecting 3 generations instantly.
Absolutely.
So let's have some fun. Can you ask me the question? The question I'd like you to ask me is, hey Cole, if you were prime minister or president, what would you do?
Hey Cole, if you were prime minister or president, what would you do?
Wow, you should have a podcast, Lesley. That was a really great question. You know what I would do? I would stand at every maternity ward in Canada and the United States, and I'd hand out a birth certificate, and I'd hand out a certificate to go and get a whole life insurance contract. Now, when I say whole life insurance, I mean properly designed for cash value. And imagine what that would look like if every child, 2 weeks old, 15 days old, was born into the opportunity that this contract would now. And I would even suggest maybe just do it. Now, we don't like 20 pays or offsets because why would you give up on energy and compounded growth? But Even
There
just
you go.
showing the value of for 20 years, what 100 Dunkin' Donuts a month, one Dunkin' Donuts a day for a month, or $200, one Starbucks a day. Anyways, that's what I would do. That's how I would get elected to be. Well, I'm a Canadian. I don't think that maybe they'd elect me to be president from a Canadian based on that. But wow, would that ever
But
be amazing if every
just to
child?
quickly tack on to that though, Cole, you because I agree, why limit it to a 20 pay or something like that? But you can get the guaranteed purchase option on there, right?
Yep.
So maybe that first policy gets paid off in 20 years, but as they get older, they can get additional policies as their income grows, they have more money to put away, they can get other policies, and those can be designed to, continue to have, premiums put in there and cash value built up. So there's never a bad setup when it comes to whole life
The only
insurance.
bad policy is the one you don't own, and
Exactly.
right
And the
and
sooner
what
you
and
start
maybe
it, the better.
that's right. And the earlier you start, the better. And
Hmm.
describe maybe just kind of for the people watching this that are thinking about changing the banking function of their life in using whole life insurance. Is a whole life insurance banking strategy? Is it one policy? Does one policy? Is it a series of policies? What does it look like? How does it mechanically kind of work?
Hmm. Well, I think everyone's situation is different, right? Everyone's circumstance is different. You probably are likely to get a portfolio of policies. So over time, you probably will have more than one, but it just depends, right? So I think of myself as an example. I was curious. I heard about it. It like made sense, but I didn't fully understand it. So I started with my first policy. It was a smaller policy because I was like, I wasn't sure. But now I have, a second policy because I needed more space in a policy to put money in. So now I have a second one. It's very possible as my business grows that at some point, even though I designed this policy to, put as much money in there as I can, at some point, as my wealth continues to grow, I might need a third policy. I don't think that there isn't any one way to design it, but I do think it's very possible to have a portfolio of policies. Because if you are, you know, if your first policy is maybe when you first graduate from college, you don't have as much money. You as you grow in your career, you're going to maybe want to put more money away. So you might, going to need to have a second policy. Maybe as you get married or as you have kids, like there's different reasons why you want to, add on policies. And, your human life value will grow. Your human life value is essentially, what is that amount? Like, what's that maximum amount that the insurance company will even cover you for? That will continue to grow as you grow, as your net worth grows, if your business grows or your income grows. All those different things are factored in. So there's not really one particular way, but I do think that it's very likely for a lot of people to have more than one policy over their lifetime.
Absolutely. So well said. We could keep going and going and going. We are going to have you back. I know
Okay.
that the people, the ones watching this that are so curious, whether you're an advisor and you want to be like Lesley, you want to have a grip on the infinite banking concept. We have a lot of advisors on this channel and we want to serve those advisors. I believe that's one way of building the 10%. As you pointed out, we're going to have Lesley back and we're going to unpack some more granular concepts and we're going to extract that inner nerd, as she described it. We want to talk about conversions a little bit more. We want to talk about riders a little bit more. We want to talk about capitalizing the policy, the difference between the concept and the product. Lesley, is there anything that you wanted to kind of get out there before we wrap up and we give our viewers their time back? Is there anything that's just kind of front of mind, that any mic drop moments?
Well, one thing I would say, and we can always expand on this if I come back again, is that if you are a single person listening to this, you also should get whole life insurance. It is not just for people with kids or just with a business or just with something like that. I am single. I am not married and I don't have kids. And I have whole life insurance because of what I talked about earlier. It is the best place for me to store my cash. So just want to leave that nugget there.
I love it. And I'm going to back you up on that. One of my best clients, I'm an advisor as well. One of my best clients has a monster whole life policies. She's in her mid 50s. She has no children and very few natural at arm's length people you might think of as
Hmm.
beneficiaries. And
Right.
she's doing it for the living benefit of it. I think I'm going to
Exactly.
interview her as well. So,
Good,
wow,
good.
Lesley. Okay, you heard it. That was a mic drop right there. What a message of service. Rebel Rock Wealth, Lesley Batson. a Canadian and an American, dual citizenship, not a former, still could kick most people's butts at the 100 meter and
I don't
probably
know.
the two.
I don't
Yeah.
know.
Oh, I don't know.
Don't
Once
put
you
that
got
out
wheels,
there.
you got wheels. Yeah. We're gonna ask you to do some smashing and some liking and some thumbs up, and look at the show notes. We're gonna include Leslie's contact information. We appreciate you. Get out there and do your version of building the 10%.